from your end also?
No, ma'am. Just only
No,
one
right?
screen is there.
नहीं हो गया है, अभी आ जाएगा 2 मिनट में, मतलब जल्दी आ जाएगा.
So, अभी रुक हो गया. Yes, I got the man.
काम करो, सब लोग रिफ्रेश कर लो
It
अपना.
is there. It is there.
Start
It
हो.
is there. Yes. Hello everyone. Very good evening to all of you.
ఎంతమంది మీలో
Hello everyone. A very good evening to all of you. Francis this side from Educating. We are happy to have you with us on a Sunday evening today, and that too for a GST Q&A session. So the topic for today's Q&A session will be ITC eligibility under GST laws along with IMS, and we will be having a discussion on the practical approach and a live Q&A session with none other than Srinivas sir. I think Srinivas sir does not need a specific introduction. He is the star query resolver of the Educating team. A small brief of Srinivas sir. Sir is a commerce graduate, a semi-qualified CMA and a law graduate. Currently, he is practicing as an advocate before the Honorable Telangana High Court. He has over 15 years of professional experience in taxation and employment, including 9 years of corporate experience with the Tata Group. He has done extensive practice in indirect and direct taxes, including VAT, service tax, income tax, and since 2017, exclusively, he is focusing on GST also. Sir is also a very active query resolver in all the membership groups and caters to queries of the participants, queries of the members basically that are put up in the group. Also, Sir has represented petitioners in the GST Grievance Redressal Committee of CBIC in Telangana. So this was a small introduction of Srinivas sir. If you have any questions, you can drop it in the chat box below and we will go on resolving all the questions one by one. It in the chat box below and we will go on resolving all the questions one by one. It in the chat box below and we will go on. So before the participants put up their questions, I would like to ask you, considering you resolve queries on a daily basis, like how has IMS actually impacted specifically the small taxpayers? What is your point of view on that? So you are on mute. You will have to, considering you resolve queries on a daily basis, like how has IMS actually impacted? Could you please lower down the voice of the system in which YouTube is open? So you are on mute. You will have to, considering you resolve queries on a daily basis, like how has IMS actually could you please lower down the voice of the system in which YouTube is open?
सर यूट्यूब को आप म्यूट कर दीजिए. यूट्यूब का जो वॉइस है ना, आप उसको बिल्कुल म्यूट पे डाल दीजिए यूट्यूब पे.
ठीक है
जी.
Now okay?
Yes, sir, it is fine now.
Yeah. Yeah, can you repeat? There was echoing of voice. Can you repeat the question?
Yes.
Sorry, really sorry.
Before we receive any questions from the participants, since today's topic, it revolves around invoice management system, which was, I guess, which was implemented from October 2024. So my question is, since you cater to queries on a daily basis in our membership groups, how do you think this IMS has impacted the taxpayers, specifically the small taxpayers?
Yeah. See, small taxpayers will have a limitation on which invoices ITC to be availed and which invoices ITC cannot be availed because of restrictions under Section 16, conditions to avail the ITC. So, to keep the track of the invoices on which ITC is availed and which ITC is not availed, it is a very tough problem for the small taxpayers because of they cannot be in a position to hire the tax professional who is having exclusive knowledge because the costing will be very high. So IMS helps them to avail the ITC on which they are eligible, and ITC on which they are not availed the ITC, they can keep the track of that invoices on which ITC is not availed very easily by going through the IMS. And moreover, the credit notes issued by the supplier. See, they may be accepting your, or it may not be acceptable for them. In case it is not acceptable for them, simply they can reject, and so that their ITC will not get disturbed in that. That will help the small taxpayer to control their input tax credit. In cases where the input returns are invoices has been issued by the supplier, but they're not uploaded, or GSTR1 is not filed by such supplier, that also they can have easily tracking of that particular invoices has been not uploaded by the supplier.
Okay. So this gives another question. This is giving another question to me at this point of time. What are the necessary prerequisites that the taxpayers must implement in their software, whatever accounting software they're using, to ensure that in case if they are choosing to comply with IMS, then it is a smooth transition to IMS?
See, if they want to go to the IMS from middle of the tax periods. Let us say it has been implemented in October 2005, but they have not started using implemented the IMS, and they want to start it from April 1st onwards. First, what they have to do is, first of all, invoices which are 3B has been filed without implementing the IMS. IMS will take all the invoices or credit notes, whatever it is there in the IMS, as deemed accepted, and it will push to the 2B. Because the reason it has been started in between. So up to 31st March, they have to keep the track as per the circular 170 that ITC to be reversed under 4B2 and reclaimed under 4D1 in the subsequent years. They have to keep separate track of that. And from April onwards, they can start using IMS so that the particular invoices will be there itself in the IMS portal till the time it is accepted or the time limit as per section 16.4 is passed. And they have the tracking of a reversal reclaimed ledger in the portal itself, which will help them to reclaim the ITC on which pertain to the previous financial year up to March 2000 or any tax period they have to break it.
Okay. And so next question with respect to IMS only. Suppose I have reported an invoice in my GSTR1 with the wrong GSTN. Now, as we all are aware, it is not possible to amend GSTN through GSTR1A also. So once I have filed my GSTR1, suppose with client A GSTN numbers, whereas it was supposed to be done through client B's GST number. Now, once the R1 is filed, it will appear in client A's GSTR2B.
Yes.
So what should be the necessary action as a supplier from my end to rectify this?
As a supplier, you can amend in the GST such invoice in the next following GSTR1.
Yes.
And it will move away from the original recipient to the correct recipient. Old GST, new GST, and it will disappear from the IMS of the first initial GST.
Okay. And suppose now it is appearing in the GSTR2B of client A of mine, जो नहीं जाना चाहिए था. In that case, suppose if the recipient ends up rejecting that particular invoice, since it does not belong to them, then what will be the impact on my liability?
As a supplier, there will not be any impact on your liability. See, when you amend the invoice for the recipient, what will happen even if he accepts and avails ITC, in the following 2B, it will come as a reversal ITC, amended invoice, and ITC will reduce. And the original recipient ITC will go.
Okay.
And depending upon the ITC utilization, available utilization, and ITC not available, interest calculation will trigger onto the recipient who has availed ITC, wrongly availed the ITC.
Okay. Got it. In case if anyone has any questions, then you may drop your questions in the chat box below and sir will cater to the questions during the session itself. So Now coming to the ITC eligibility part. Suppose I am a work contract service provider and I have certain projects going on at particular sites. And then those sites I'm taking renting basically for accommodation services or residential units. So what is your point of view on the eligibility criteria for these renting of accommodation units?
Right. See, works contract, place of supply will be the place where such work is going on.
Yes,
So as a recipient of service, you have to get registered in that particular state and you have to avail the ITC for the supplies received in that state only. Because even
G.
renting of accommodation is also the place where it is situated. So if you are not registered in that particular case, even though the supplier raises an invoice, place of supply will be the different state and place of registration will be the different, and it will fall automatically under restricted conditions in the ITC. And you will not
Yes,
be able to avail the ITC of such supply of service. One has to be
yes.
very careful in that area.
Okay. So we have received one question from Thirukumaran ji. I will read out the question for you.
Yeah,
He
please.
has asked that, sir, I have received the invoice, but the supplier has not filed the return. In this case, can they take the input?
No, he cannot avail the input. From January to 1st January 2022, that invoices has to be reflected in GST or 2B of the recipient, then only they can avail the ITC. Otherwise, they cannot avail the ITC. Till the time supplier files the GST R1, he cannot avail the ITC.
Okay, that means I think it gives us the crux that the conditions specified in Section 16.2 of the CGST Act
Yes.
read with Section 17.5 that the ITC should not be specifically blocked.
Block.
All those conditions must be
Satisfied.
satisfied. Yes. So I think you will also agree to this point that there are instances when insurance invoices and credit notes they appear in GST are to be of the recipient. Now, with the IMS, that particular requirement for reversal of credit notes of insurance ITC has also been nullified. What is
Yes.
your point of view on this?
Yes. It's a very advantageous update in the GSTN portal because the reason insurance ITC is in blocked credit. So as and when the invoice has been appeared, we might have been reversed under permanent reversal, that is 4B1 of the GST or 3B column. And again,
Yes.
if such supplier raises a credit note for any reason, again the
Hmm.
ITC will get reversed and there will be a discrepancy between GST or 2B and IT's GST or 3B ITC availed for because of
Yes.
credit note. Because already we have reversed it, and again if we reverse, we will be losing the ITC. We will be adjusting the ITC in 4EFI and we will be escalating the ITC to that extent. And because of the reason that IMS has been updated with an option to amend the ITC to be reversed against each credit note. If such supplier can, such recipient can declare the ITC to be reversed in that against that credit note and generate the 2B, that ITC will get restricted only to the extent of ITC to be reversed opted by the recipient, and ITC and 4EFI will get auto-populated according to the ITC to be adjusted, and there will not
Yes.
be any discrepancy. And when you see the updated GST or 2B after filing the return, then you will get another to be generated against the credit note. You will get the comments inserted by the recipient. It will be easily understood by the proper officer who is reviewing that why the credit note difference is there and why reason is the credit note. That already will be putting a comment saying that this ITC pertain to this credit note is already reversed in previous tax periods, as the credit note has been not accepted in the particular month of the tax period. Type.
So I think even if IMS is there, then as taxpayers and professionals, we have to ensure that we are maintaining a particular proper reconciliations of every impact that we are taking, be it rejection of credit note, be it rejection of an invoice, or keeping the credit notes pending. And
Yes.
now the government has also provided us the option to keep the credit notes pending for one tax period. And I
Yes.
think this condition does not apply to debit notes. Debit notes can be kept pending for indefinite tax period. Is my understanding correct?
Yes. Upward reversals can be kept pending, and till the time section 16(4) time limit, that is filing of annual return or 30th November of the following year. Whichever is earlier, it can be kept pending.
Okay. So we have received another question from Vishnu Prakash ji. His question is it compulsory to take action on invoice appearing in IMS?
As
Now,
of
the subsequent, yes,
yeah, please
yes, sir.
complete the question.
Yes. And further, will the GSTR 2B be generated correctly even if no action is taken on invoices appearing in IMS?
Right. As of now, generation using of IMS is not mandatory. It is an optional given by the GST portal, because the reason it is restricted only to the extent of 500 records. If it is more than 500 records, there are hurdles to go with the IMS. And can you repeat the second part of the question?
Yes, second part of the question is, will the GSTR 2B be generated correctly even if we are not following IMS?
Fine. Here we have to take care two issues. If you have filed the GSTR 3B of the previous month, then it will not be a problem. Auto-populated GSTR 2B will be generated automatically by the GSTIN. If GSTR 3B is not filed by the due date or by the time GSTR 2B generation date, then GSTR 2B will not generate automatically. It has to be generated through IMS only. So in that case, you have to accept the invoices in IMS and then only you can generate the 2B. It has
Sir,
made
could you please
it has made dependent on filing of GSTR 3B of the previous month.
Sir, could you please repeat this point again, the second point?
See, I'll explain again. For example,
Yes.
you are filing the GSTR. It will take the 2 months now. January 2026 3B and February 2026 2B. If you have filed your GSTR 3B or January 2026 before the generation of 2B period of February, that is 14th March.
Yes.
Filed your GSTR 3B for January 2026 by 13th of the March 2026, then GSTR 2B for the month of February will get generated automatically. If you have delayed it beyond the period of 14th March, which is the due date for generation of 2B, then
Yes.
GSTR 2B will not generate automatically. You have to generate it through IMS only. It is dependent now. Generation of 2B is dependent on the filing date of the previous month 3B.
Okay, that means in case if we are filing the 3B prior to generation of GSTR 2B, then it will be automatically
generated.
Yes, if we are delaying it, then we will have to take action in IMS to trigger the system that now you have to generate the GSTR 2B and then only the 2B will be generated.
Yes.
Okay. So this one more question is there in my mind. I think we are getting this query in the membership group also because of the ongoing war situation. What is happening is that people have initiated export of goods from their end, but the goods are actually not being exported because of the ongoing tensions with respect to the war. So what will be your suggestion or advice to the taxpayers in this regard, specifically for export of goods to the countries where the war is happening right now? What are the precautions that we can take from our end so that the compliance is not getting too burdensome because of the situation?
Yes. Non-export of goods within 90 days of the invoice will lead to other complications. So whether we will be able to generate the bill of lading or not is a question. If not possible, then take back the goods and reverse the invoice. Raise the credit note and reverse that invoice.
Okay. Suppose if I have already generated an invoice in February and the goods could not be exported. So I'll have to generate a backdated credit note of February itself?
You can do
Or
both.
I can do it of March also.
See, there are restrictions. See, if you are using a SAP or something like that, you cannot go and generate any backdated document or backdated document. So invariably, you have to generate the document in the current period only. If your system allows to generate the document in backdate, you can generate the backdated with current date IRM and see that it reflects in the GST or one of the particular month. Otherwise, your tax liability may be increased because of you are exporting with payment of tax. Keeping in view
Okay.
the fund procedures, if you are exporting the goods with payment of tax, then it will be a burden on you. You have to pay the tax.
I think it will also depend upon then whether we are exporting it through the LUT route without payment of taxes or with payment of IGST.
With payment of IGST. If it is with payment of IGST, then it will be a problem. If you are paying out cash, then your ITC will get blocked.
It will impact the working capital also.
Working
Yes.
capital.
Yes. So we have another question from Vishnu Prakash ji. He is asking that what is the purpose behind implementation of IMS when we already have GSTR 2B, which was being generated earlier also when IMS was not there.
Yeah, very good question. See, when IMS was not there in place, we have GSTR 2B and more particularly with the credit notes. If a wrong credit note is issued by the supplier, you are forced to reverse such ITC or you will have a discrepancy red flag in table 4A of GSTR 3B to generate the notice by the proper officer. By using the IMS, you can restrict the credit notes and you can reject the credit notes so that your GSTR 2B and ITC availability will not get disturbed. That is one area. And another area is already we discussed the ITC on which is ineligible as per section 17(5) blocked credits. And we have reversed the ITC in previous tax periods and for which a credit note has been received, which will give a difference in GSTR 2B versus table 4A of GSTR 3B by adding that value of the credit note to the 4A file, because auto-generated 2B will have that reduced credit and you are not required to reverse the such ITC. It will generate a difference where IMS will help you a lot. You can restrict the reversal of credit of ITC of the credit notes and also keeping pending of the invoices which you have not received. Instead of keeping manual tracking, which invoice is not availed, which invoice is availed, instead of having 4B1 and 4D1 reversal and reclaim ledger balance, you have to keep the track of the invoices. Whereas in IMS itself, you can keep the pending invoices.
Okay. So another question by Vishnu Prakash ji, that what is the logic behind taking the invoices as accepted in IMS if no action is taken in IMS?
Can you repeat the question, please? Sorry.
Yes, I will repeat the question. What is the logic behind taking the invoices as accepted if no action is taken in IMS? I think what he is asking is the deemed acceptance of the invoices. That even if we are not taking any action, the invoices do auto-populate in our GSTR to be as deemed accepted. Vishnu Prakash ji, I hope my understanding is correct and this is your question. So he's asking the logic behind it.
Logic is you will have the tracking of the invoices which are kept pending and what is the invoices which are required to be ITC to be availed. That tracking gives you a lot of help in your regular maintenance of accounts and availing the ITC. Otherwise, it's all deemed accepted and entire ITC will pop up in 4A5 and you have to follow the circular 170. Manual tracking
Yes.
of invoices. By any chance, if a particular line of transaction gets missed off or gets duplicated, you'll be under trouble. And small taxpayers will have a lot of issue of ITC. Handling notices, subsequently handling notices, complaints, procedures will be a costly affair for small taxpayers. Even for big taxpayers also, it is a costly complaints. Handling litigation is a costly affair. Instead, maintaining the procedures and correct way is a better option, which will reduce your cost.
So I think another point here is that by deemed acceptance, what the government is trying to do is that even if you are not compulsorily following IMS, then also the invoices will get auto-populated in your GSTR 2P as they were doing earlier, right?
Presently,
Yes.
the IMS has been given as optional because of the restriction on the portal of limited invoices. Now it will not remain same as it is what is situation is now. Over the period, it will be made open whatever the number of count, irrespective of count of invoices, you have to go through IMS only. In that circumstances, it will be helpful. Deemed acceptance concept will go away then. Only mandatory, it will come to mandatory. Only Rule 60 has to be amended. Once Rule 60 is amended, then IMS will become mandate.
So, just one question. What is your point of view in case if IMS will be mandatory? Will it be better for the taxpayers or the existing GST or 2B generation as it is, even when you are not taking any action on IMS?
See, it depends upon the organization's perception and maintenance of accounts and records on which ITC to be availed and on which ITC not to be availed. So, see, there are multinational organizations or FMCG organizations, manufacturers or distributors where lakhs of transactions will happen. Let us say the Metro Cash and Carry is there, or DMart is there, Vishal Mega Mart is there, wherein all taxable supplies will be there, exempted supplies will be there, not many transactions will flow. For them, handling the IMS will be very difficult task because volume of transactions will be very high. Whereas a small taxpayer or the taxpayers who are under works contract services, wherein outward supply will be very less and inward supplies will be also minimal compared to FMCG. In that case, it will be easy for them to handle the situation. So that is the reason present situation IMS has been kept optional.
Yes.
So the government might be thinking on the back end how to what type of solutions has to be given for this and how it has to be handled. But down the line, in future, it is going to happen that IMS would become mandate.
Okay. So next question is from Mahendra Prajapati ji. I will read out the question for you. He is asking that we are a proprietorship firm providing 100% services to UK-based customer only. But due to Aadhaar mismatch, we are not able to get the ITC code. We are exporting services since last 9 months. What will be the implications?
See, in export of services, IEC code and linking of your remittance, Aadhaar. I'm not much aware about the export procedures, but without export code, you may not be able to get the FIR inward remittance in foreign currency. That is one of the conditions to satisfy as per the GST law. And because of that reason, if you are not able to get the proceeds, you will not be able to get take the refund because relevant date for the export proceeds too is for export of services realization of export. Till the time you realize your export services, you will not be able to claim any refunds.
Mahendra ji, I hope your query is resolved. In case if there is any further question, subsequent to this, you can put it in the chat box. So next question is from Mansukh ji. He is saying that normally we don't take any action in IMS. We just download the GSTR 2B and make reconciliation, and they're using Circular 170 also for taking the ITC in GSTR 3B. So he is asking, will it be okay?
Yeah, it will be perfectly okay. No issues. Till the time you have the control on the balance available reversal in the reversal reclaim ledger with the transaction level breakup, there will not be any issue. If you lose the track on the invoice level, then it will be a problem.
So in case if any taxpayer is following Circular 170, then I think keeping a track of the reversal and reclaim ledger balance as on the GST portal and that with the books is pretty necessary.
It's obviously, but it will not match. No? Reversal reclaim balance will not match with your books of accounts because the reason is you have not availed such ITC for many reasons. You might have been not received the invoice, or you might have been not received the goods, or goods are in transit. There are various reasons. It depends upon transaction to transaction. We have to analyze and then we have to keep the track of the balance. Transaction wise record reasoning we have to maintain.
Okay.
Same thing is
So,
given in IMS. Now, if you're keeping any record pending in IMS, there is option available, remarks to be entered in the, you can enter the remarks also in IMS. That will
yes,
generate.
now the remarks are available.
Yes, invoice not received, goods not received, goods not acceptable, price variation, credit, waiting for credit note by the supplier.
Okay. So next question is from Vishnu Prakash ji. He is asking that can an unregistered person make interstate supply of services? If yes, what can be the maximum proportion of such interstate services to total or local interstate services?
Interstate service supply of services limit is restricted to 20 lakhs for obtaining the registration. In this pan India, there is no change in that. And interstate supplies can be done by an unregistered person. There is no limit till the time he reaches the threshold limit of 20 lakhs.
Okay. And if his second question, second part to this, if yes, what can be the maximum proportion of such interstate services to total or local intrastate services?
There is no proportion, there is no restriction, no bar. It can be any combination. Even there is no local supply, you can do 20 lakhs of only 20 lakhs limit, whether it is intrastate or interstate. Total supply should not exceed 20 lakhs. Once it crosses 20 lakhs, you go for registration depending upon your supply of services.
Okay. Anyone, if you have any questions, you may put your question in the chat box below. And in case the participants whose questions have already been answered, you can put your counter questions also in case if you have any query. So till the time we receive another question, I got this query a few days back. So there is this person, he owns a car for his business purposes. The car was basically purchased from the company's account itself. Motor vehicle it is, less than 13-seater capacity, and now they want to go for the servicing of the car. The question was whether or not the ITC for the servicing of this motor vehicle will be eligible.
It will not be eligible for ITC.
ITC in case of motor vehicle in any case scenario in less than 13-seater capacity, it will not be eligible.
It will not be eligible. Unless otherwise you are in the supply of same service.
Okay. So next question is from Divyansh Kanoi. He is asking on amendment of credit note that was rejected on IMS. The effect is not auto-populated in GST 3B, but the rejection was added back in the auto-populated figure by them.
No. Is from supplier point of view? Is it from the recipient point of view?
So I think it is from the recipient point of view, since he is saying that the rejection was added back in the auto-populated figure. It must have been done manually. Divyansh, can you please confirm this point?
No, yeah, I got the question. I'll repeat the
Yes.
question and I'll answer it. X has received a credit note. He is a recipient of supplies. And let us say there is a 1 lakh rupees of credit, gross credit, and 10,000 rupees of credit note. So a GST or 2B will auto-populate 90,000 of ITC. Because of the credit note is wrong credit note or it is not acceptable by the recipient, he has rejected such credit note and he has regenerated the ITC from IMS portal. So he'll get the ITC of 1 lakh rupees in GST or 3B. It is correct. There is no hitch in that process. It will be added back to the ITC available in 4A5.
Divyansh, I hope your question has been answered. Could you please confirm? So we have, we can just move on to the another question till the time Divyansh replies. Another question is from Vishnu Prakash ji. He is saying that generally Kirana and general people will have B2C sales and do not record the identity of the customers. If the turnover of such stores is more than 1 crore every month, is there any problem for raising B2C invoices of such huge turnovers?
There is no restriction. There is no bar.
Okay.
But you have to raise the invoice. Invoice, customer-wise invoice has to be raised because the limit for raising an invoice per day has been restricted. If the supply is more than 200 rupees, you have to raise the invoice as per the customer-wise. If the supply value is less than up to 200 rupees, you can consolidate such supplies and you can raise the invoice on day basis, total turnover of less than 200 rupees turnover. Let us say there are 10 invoices of 50 rupees, 60 rupees, 20 rupees, 150, 170, 180 rupees like that, and it's consolidating is coming around 4,000 rupees. So you can raise such for invoices lesser than 200 value, consolidate invoice day wise, keeping a summary of such supplies. Otherwise, you have to raise customer wise invoice. Otherwise you are not following the rules. You may be penalized by general penalty under section 120.
So Vishnu Prakash is saying that customer's identity is not recorded. Obviously, it will not be easy for the kirana shop owner to keep, a track of each and every customer who has come to them during the day or even during the month to purchase stuff.
See, you will be raising, you have gone for shopping, a kirana shop, you paid by cash, and need not shopkeeper need not required to keep the track of such supplier, sorry, recipient, customer. You'll say simply, raise the cash bill simply. That's enough. Not required to keep the customer identity, no?
Vishnu Prakash, could you please specify the question? You have mentioned separate bills are issued to each customer. So another question. Till the time we receive any response from Vishnu Prakash ji. So the question is that is it mandatory to find the refund applications chronologically in every case scenario?
Earlier it was based on tax period.
Okay.
Now it is invoice level refund procedure. You can select the particular invoice and claim for the refund.
Okay. So suppose if I have not filed the refund application for previous 2 quarters of 25-26, can I now do it now straight away from Q3 of 25-26?
That's what my answer is. See, earlier
Yes.
it's based on tax period. So if you doesn't have any refund, unless otherwise previous tax period is refund application is filed, you will not be in a position to file the application for refund for the current tax period.
Okay.
Now the refund application procedure has been changed from tax period to invoice level. So particular invoices you have to pick up and claim the refund. Let us say invoice number 1 to 10 you have issued, exported. Let us say 1 to 2 has been issued to Germany and 3, 4 has been issued to UK, 5, 6 has been issued to France, 6, 7 issued to USA. 1, 2 you have realized, 4, 5 you have realized, relevant date has been come, FIRC has come. You can claim the refund for respective invoices for which you have realized the FIRC. Others you can keep pending. Whenever you realize it, you can claim the refund. For export of goods, yes, for export of goods, with payment of tax, it automatically comes. Refund comes automatically.
Yes. Okay. So another question is, so many times it happens that our clients have agreement further with their clients that this project will span over a period of 6 months, and there is a payment schedule also, which they follow as per the PO terms and agreement. So in many cases, what happens is that the 180 days condition is not met, the payment condition. So my question here is, will the reversal of ITC be mandated in this case scenario also, even if the PO provides that the payment is to be done, suppose say after 6 months?
See, there are different laws in our country. One is Contract Act, which provides privacy to the contract. And GST Act says that the payment has to be paid within 180 days.
Yes.
It is overriding the privacy of the Contract Act. So, but officer will say that you have not made the payment, you have to reverse the ITC. Whereas as per the Contract Act and privacy of the contract, your right cannot be overridden by any other law. Primarily, you may not be able to get the favorable reply with the proper adjudicating authority or appellate authority, but very chance is there you get the proper order from the tribunal or higher courts. It may not happen with the appellate authorities. Every chance of litigation is there with such type of transaction.
Usually what happens is when we ask as professionals, in case if we are asking the client to reverse this ITC, they have this point that as per the PO, this payment is to be done after 6 months. Then why
Yes.
should we reverse the ITC?
Yes, I have my privacy of contract is there. Contract between supplier and recipient has agreed. Who are you to ask me to reverse the ITC? My privacy
Yes.
of contract. That's what is privacy of contract. Contract Act will come into picture. There's a litigation we have to fight.
Okay. So now next question, it is with respect to the adjudication part. Suppose I have received a show cause notice in December 2023. I did not reply to the show cause notice, neither did I appear for the personal hearing. Subsequently, in April 2024, I ended up receiving a GRC 07 for that particular notice. And in between, there was only a reminder to that show cause notice. And post that in April 2024, I received a DRC 07 to which I have not replied, neither have I paid the demand. Now, the appeal time period has also passed, the 3 months time period. So, what should be my next course of action as the taxpayer in this case scenario, considering the department has not initiated any recovery proceedings also under Section 79?
Fine. Negligence of law cannot be protected by anyone. It's a fixed rule. So if you are negligent and you have not acted upon in the time, there is no other remedy for you, only other than to pay the taxes demanded as per the demand. By any chance, because of the reasons beyond your control, you are not able to attend to the show cause notices or not able to appeal to the appellate authority, you can go out to the higher courts saying that for such and such reason I could not file the appeal. Kindly grant me the condolence and advise the appellate authority to accept the appeal and start the appeal proceedings. This can be done.
Okay. So this question is with respect to the initiation of recovery proceedings under Section 78 of the CGST Act. So
Yes.
the question is there a definite time period in which the proper officer should initiate the recovery proceedings from their end?
Proper officer can initiate recovery proceedings only after the time available for going for an appeal. Till the time he cannot initiate the recovery proceedings.
Is there any specific time limit that it should be initiated within this time limit only?
An order passed under Section 73 can be appealed within 3 months to the appellate authority and 1 month for condemnation. So 4 months. Within that 4 months, he cannot go for recovery proceedings. Unless otherwise, they have solid evidence saying that the recovery of the tax will not be possible and getting caught hold of that particular taxpayer may evade the tax and flee away and he will not be able to get him. Then they can go for the recovery proceedings. Otherwise, they cannot.
Okay, and after those 4 months period, that officer can initiate the recovery proceeding anytime.
Anytime, because there is no appeal has been appealed. There is no pre-deposit. There is no stay on that demand raised. There is no restriction on the proper officer to go for recovery proceedings, initiate recovery proceedings.
Okay. So I think just one question that I'm going to ask, it has been a debate from quite some time now, and it is about the communication of notices to the taxpayers. There is a specific section in the GST law pertaining to this, but when it comes to mode of delivery of communication to the taxpayer, mere uploading of notice on the GST portal, does it amount to proper communication of the notice to the taxpayer without any additional email or any reminder that a notice has been issued to you?
Different honorable high courts in different situations have delivered differently in this mode of service of the order. See, it depends upon the recipient or taxpayer or registered person who is involved in such scenario. Let us take two persons. A person who is well acquainted with the system, is a tech person who is involved in tech services and all, who is regularly attending the portal, and another person who is let us say, take an agriculturalist, most are an illiterate person who is not having any technical knowledge or sound knowledge about the technical functionalities, how the things flow. If a mode of service, if it is served on the portal for the two persons, can we take the same decision or same conclusion for these two persons? For the tech person, he is aware of what the things are happening, and we cannot say that it has to be served in alternate mode. For the same reason, to the other person who is illiterate or who is not having any proper knowledge about the tech services, and he doesn't have any even knowledge of how seeing an email or reading an SMS. SMS comes to a illiterate, what he'll do? Just he'll see and just push it away. And at times he will not even see that. How it can be concluded? It has to be decided by the court of law only. That is the reason different judgments has been pronounced by the different court of laws. In some cases, in a illiterate person, if the recipient taxpayer is an illiterate and is not in a position to read the notices or whatever it is, mode of service cannot be a technical one. It has to be a physical one. And simultaneously, if it is a technical person and who is having the knowledge, then it need not be a alternate service. It depends upon the situation to situation, circumstances, on which action has to be taken or not. It has to be decided by court of law in each case to case.
Okay, as Vishnu Prakash, he is also agreeing to this point that notices should be the communication should be compulsorily on the registered email ID and mobile number also. It happens many a times that we know we have this habit of going to the GST portal for the compliances part, and we do not check the notices portal, considering the portal also does not notify us in case if anything new is there.
Even portal has been updated now. If fresh notice comes just after logging in, you'll see that
yes,
on the right side of that notice, new notice is there.
Okay, sir. Any further question, anyone? Your question can be related to anything under GST. So, any points that you would like to tell the participants regarding IMS or the implementation of IMS from the knowledge bank of yours? Any particular specific point that will help them?
Yes. For the small taxpayers, SMEs, where the inward supplies in a particular month is less than 500, it's better you go with the IMS, which will help you a lot in having control on the invoices which are uploaded and which are not uploaded by the suppliers, and for which returns has been filed or just simply uploaded. ITC availability, you'll have a lot of control on that. Instead of going for circular 170 procedure, IMS is very, very helpful for the small taxpayers as of now. And you have the control on your credit notes also, which wrongly uploaded credit notes simply you can reject. It will become the botheration of the supplier. He'll be out of that problem. That variance between GSTR 3B and GSTR 2B.
So I have one question. Suppose if I have mistakenly rejected an invoice that pertains to me, It was done mistakenly, and I have filed my GSTR 3B also.
Fine.
Now that a particular invoice is out of my IMS,
Yes.
the supplier will be paying liability on the invoice, considering it will not impact the supplier's liability.
It will not
So
impact.
it will not impact. So what should be the next course of action, both from the suppliers end as well as the recipients end? I
Yeah.
think this thing can happen inadvertently by anyone while selecting the records in IMS.
Yes. I'll make some few value addition here.
Yes.
Why the reason tax liability of the supplier is not getting reduced in case of invoice rejected by the recipient? Because the reason is tax collected has to be paid to the revenue without any hindrance. That is the reason there is no deviation in the tax payable by the supplier. That is one reason behind there is no reduction in the tax liability even the invoice is rejected by the recipient. And now, how to rectify this? You have to contact the such supplier saying that erroneously I have rejected such invoice, which was eligible ITC for me. Because of my mistake, I am not in a position to avail the ITC. So ask them to amend the invoice with the same details and file the subsequent GSTR1. There will not be any escalation in liability of such supplier, but recipient will be in a position to, it will land again in their IMS, and they should be cautious that again it should not be rejected. That option is available only once for particular one invoice. So it has to be amended and uploaded again and filed by the such supplier so that it will again park into the IMS and you can accept the invoice and avail the ITC.
Okay. So just a subsequent question to this. Can the supplier issue a credit note instead of the, I am understanding that he will be doing a downward amendment. Or
By downward
if you could just explain, if you could just explain this part a little bit.
Fine. Let us say Mr. A has issued an invoice to Mr. B of 1 lakh rupees plus 18%, 1,18,000 for supply of goods or services, whatever it is, for which Mr. B is eligible to avail the ITC. By mistake, Mr. B what he has done is, instead of accepting, he has rejected such invoice and generated the GSTR 2B and filed the GSTR 3B. Because his output tax was lesser than the input tax credit available. So there was no requirement of cash payment and he has not reconciled the ITC, balance ITC available with the books of accounts. Simply has filed the return, GSTR 3B. Subsequently, he understood that instead of accepting such invoice number issued by Mr. A, he has rejected it. Now what he has remedy available for him is, he has to go back to Mr. A saying that such and such invoice number I have rejected erroneously from my side. You kindly amend invoice in the next following GSTR1 tax period with the same values. Amended invoice will be the same invoice, amended date will be the same, taxable value will be the same, place of supply will be the same, tax rate of tax will be the same. It will come with the same values. Everything will be the same. And he'll say that GSTN portal will accept that. And there will not be any difference in the tax payable by such supplier because the tax paid in the original invoice and amended invoice is the same. There will not be any additional liability occurring for the such supplier. By saving and filing GSTR1 after amending that by such supplier, it will again auto-populate in IMS of the recipient. Yes. There he can accept and file the return. By any chance, if he rejects it, again it is gone. Supplier cannot amend the invoice twice. Only amendment option is available only once.
Okay. Got it, sir. So Divyansh has clarified regarding his question. So I will repeat first the original question of Divyansh. It was on amendment of credit note that was rejected on IMS. The effect is not auto-populated in GSTR 3B, but the rejection was added back in the auto-populated figure. Now Divyansh has clarified that it is from the supplier's point of view, and they are auto-populated output liability in GSTR 3B.
See, now the question is turned out. from recipient point of view to the supplier point of view. When a credit note is issued by the supplier, output tax liability will be reduced to such supplier. Output tax liability is 1 lakh, credit note 10,000 rupees. Because of credit note, liability has come down from 1 lakh rupees to 90,000 rupees. And he has filed the GST or 3B for that particular month. Subsequently, recipient has rejected the credit note. So the such liability will add to the recipient supplier's output tax liability as tax payable. And if he amends the credit note and again generates a credit note, addition by auto addition by the GST portal to the output tax liability and amendment of such credit note and reducing the tax liability will nullify the liability, and again tax liability will come the same figure. Shall I explain it again, or is it okay?
Divyansh, could you please clarify if the answer is clear to you? So I think we'll receive a response from him soon. So another question that I will ask. So when we go for filing the refund application for export of goods, while the export of goods is being routed through the LUT without payment of taxes. For zero rated turnover of goods, there is a condition for 1.5 times of the domestic supply for value of goods.
Yes.
It was, I think, challenged in a high court also, in which the high court gave the decision that this provision is in contravention, basically. So I just wanted to understand that what exactly is that 1.5 times condition?
I'll tell you.
Yes.
You are an export of goods. Let us say in local market it is 100 rupees. So your export value should not exceed 150 rupees. It is a condition made for refund procedures.
Yes.
So when you go for refund application, there will be a calculation, comparative calculation. Whatever the price you have exported, your export price will be restricted to 150% of the local supplies made. In case there is no local supplies at all, what will be the comparative price? You mean to say there is no local supplies, there is no refund? That is the issue. So for that reason, court has said that it is not valid calculation. You have to allow the refund.
So this provision is still there in Rule 89 sub-rule.
Still it is there. It is not struck down by any court.
We'll have to comply with it. And also, since this is a high court decision, it might be challenged, contested in the Supreme Court also.
Supreme Court also, yes.
Suppose if I do not have any domestic supplies, I am only carrying export of goods. Then in that case, how will I take the 1.5 times value? Will I evaluate my local market of any like-kind supplier of like-kind goods?
Your valuation rule will come into picture.
Okay.
If you have similar value, then you will go for the valuation rules.
Okay. In case if we do not have any domestic supply, then we'll have to defer to the valuation rules for meeting that 1.5 times condition, considering it is still there in the GST law.
Yes. In my particular one of my client case, what we have done is 150% of purchase value we have adopted and we have calculated. There was a marginal difference, so we accepted. Client has accepted for the marginal difference instead of going for the litigation. We got the refund claim.
Okay. So we have received another question from the branch. He is asking that, sir, how can a supplier take the benefit of 180 days payment rule if a recipient has not made the payment?
Not clear.
How can a supplier take that? Okay, so what he is asking is that how can a supplier take the benefit? Is there any way the supplier can take benefit of the 180 days rule payment if the recipient fails to make the payment within 180 days? As of now, the onus is on the recipient that they'll have to reverse the ITC. Is there any benefit that the supplier can take?
There is no benefit. There is nothing in point of supplier. It is only for the recipient to make the payment within 180 days. Condition is only for the recipient, not for the supplier. No? There is no benefit. In fact, the supplier will be under loss. He'll be increasing the working capital by way of debtors. Realizations working capital life cycle will increase. Let's say if you have an invoice and generated on 1st of the month and your credit period is 180 days, you have to hold your debtors life is 180 days. If it realizes within 100 days, your working capital is circulated little bit early. You are saving interest on your working capital.
So, is there any course of action that a supplier should take? Suppose being a supplier, I have not received the payment within
Being
180
a
days.
supplier, you are not received the payment means if you are an MSME, you are protected by law. That recipient will not be able to claim the income tax deduction.
So, what about the
Civil procedure
big
only.
taxpayers? Same.
Civil procedure only. If you are not realized your debtors, you have to go for civil procedures.
Okay. So, next question is from Mahendra Prajapati ji. He is asking that we have refund under inverted tax structure. Can we claim refund of services and capital goods purchased?
Only goods. Refund can
Mahendra ji,
claim for inverted duty structure only on inputs, not on capital goods or services. It is only for.
Mahendra ji, yes, Mahendra ji, I hope the question is answered. So, we have another question. I will read the username. Username is RAGKD. He is asking, customer has not paid and the supplier has not reversed the sales before GSTR 3B of October 26. And later the customer rejected goods, then what will be the remedy available to the supplier?
You mean to say that
And
financial year 25-26 supplier 25
it will be 2026,
20,
considering
24,
them
25.
mentioning October 26.
So what would be the remedy? You have to issue only financial credit note. You cannot pass on a GST credit note because you cannot reverse the IT tax component once the section 34 time limit passes. 30th November will be the time limit. And when a GST credit note is issued, you have to ensure that ITC is reversed by the such recipient. So you will not be able to ensure that the recipient has reversed the liability. So it's better you issue a financial credit note.
So he is asking, there is a subsequent question to this, that can he claim refund? I think he's talking from the supplier's perspective only. So can the supplier claim refund?
For?
Just a moment, sir, I'm reading it again. So with respect to the original question only, he is asking that can he claim refund?
Who? How can
The supplier.
There is no option for claiming refund unless otherwise is a customer, end user.
Could you please specify the question again in case if you are not able to understand it correctly?
Connecting question, which connection connectivity is losing? For which question the refund is going to ask?
So it was with respect to the question. So I'll repeat the original question.
Original question.
Customer has not paid and the supplier has not reversed their sales before October 2026 GSTR 3B.
Okay.
And later, customer rejected the goods. Then what will be the remedy available to the supplier? And subsequent to this, he asked the question, can the supplier claim the refund?
Supplier cannot claim the refund. No way. Because of customer not paid within time, supplier cannot claim the refund. It is lost. GST component is lost.
So, is there any advice that you would like to give to the people, professionals who are present here, that how they can cater to these situations or take any precautionary measures in advance for these kind of situations?
Review your reverse receivables list before financial year gets end. Start reviewing it in July or August. Why? For what reason? Receivables as on 31st March are pending. Why it is not cleared? What is the reason behind it? Is this as per the agreement and supplies are made or accepted by the recipient or not? Or for any hitch that recipient has not paid to the supplier, that quality of goods or supplier services is not acceptable. In such cases, ensure to raise the credit notes and get back the goods back, so that you can pass on the GST credit note to such supplier recipient and reverse the output tax liability before time limit of 30th November or furnishing of annual return for the financial year 24-26. It will help you a lot in saving your working capital and tax component.
So we have received another question from Divyansh with respect to the 180 days discussion that we were having earlier. He is saying that MSME Act is not protecting traders where major of these situations are occurring. That the recipient is not making the payment within 180 days and the MSME Act is not protecting them, also protecting the traders.
You have to approach the court of law, civil case, along, if not individually, you can approach through the association of that SMSME group, where there will be a particular association. You can approach through association to the court of law. That particular thing has to be made payable. But this 180 days condition has been inserted based on the request by MSME group only by the GST and CBSE.
Okay, so we have another question from Mahendra Ji. The question is, client had disclosed liability in GSTR 9 of financial year 2021. The liability is still unpaid and the department also never followed up on this unpaid liability. Now, can the department ask the taxpayer to repay this?
2021 financial year, section 74 time limit is also over, and voluntarily declared a liability, there is no time limit. They can recovery proceedings can be initiated at any time.
So I think this circles back to our discussion that we had in the beginning of this session, that recovery proceedings can be initiated anytime in case if the liability is unpaid in the hands of the taxpayer.
Yes.
Right. So another question from Divyansh. He is asking, in case of amendment of rejected credit note, on rejection of credit note, the value is added back to the supplier, added back to the GSTR 3B of the supplier.
Output tax
But when it output tax liability, yes. But when it is amended in subsequent period, the effect of amendment on the rejected credit note is not affected in GSTR 3B auto-populated figure. So should I repeat the question again?
No, just a minute. Huh?
Okay, sure.
Just a minute. Just hold the line. Are you able to see my screen?
Yes, so the screen is visible, but I am not sure if it will appear on YouTube as well. Rahul, could you please confirm it if it will be there on YouTube as well?
Yes.
The screen?
थोड़ी देर में हो जाएगी.
Okay. So we can wait for 2-3 minutes.
Yeah. Once it is reflecting.
It is appearing, sir.
Yeah.
It is appearing.
Now, credit note is issued on 25th January 2026 and tax involved in that such credit note was 10,000 rupees. Recipient has rejected and GSTR1 was filed by the supplier on the due date of that is 11th February 2026. While filing the GSTR3B by recipient, he has saw the credit note and he was not aware that credit note is of his only. And what he has done is on 20th February, while before filing the GSTR3B, he has rejected the credit note so that his ITC has remained intact. Subsequently, the rule is in case of credit note is rejected, such value will be added to the output tax liability of the recipient in the following month. So following month, February 2026, output tax liability of the supplier is 1 lakh rupees. Credit note rejected value is 10,000 rupees. Tax payable will be 1,10,000 if the credit note is rejected credit note is not disturbed by the supplier. But supplier saw that why the tax liability has increased. So he understood that a credit note of such and such credit note issued to such and such person is rejected. So that is the reason my tax liability is increasing by 10,000 rupees. Now what he has done is he has spoke to the recipient, "Arey boss, why you have rejected the credit note? That credit note pertains to you only towards the excess value issued to the particular invoice. So that is the reason I have issued the credit note. Why you have rejected? Arey boss, mistakenly I have rejected the credit note. You can do one thing, you amend it and regenerate the credit note. I'll accept in the following month." So supplier has what he has done is while filing the GSTR1, he has amended the credit note with same values and everything. And he has filed the GSTR1. GSTR1 liability will be 90,000. Actual liability is 1 lakh rupees. Because of amendment of credit note is become 90,000. Added credit note value is added to the output tax liability will be 10,000 rupees. Net liability will be actual liability payable by the supplier of 1 lakh rupees. Hope I am clear now.
So I have some input in this with respect to the query that the Vansh has reframed just now. Now he is saying that the original credit note was mistakenly rejected by the recipient, right? And once the credit note was amended in the subsequent tax period and the recipient accepted that particular amended credit note,
Right.
however, no differential impact of the accepted amended credit note auto-populated in the GSTR3B of the supplier. Divyansh, am I correct that this is your main query?
That's it. Yeah, I explained the same thing. See, February
Yes.
month, the output tax liability is 10,000, 1 lakh rupees. Because of the reason credit note is rejected, it should be 1,10,000 rupees of February.
Yes.
Because of amendment of the credit note, liability has auto-populated to because of amendment and addition of credit note, liability of GSTR1 will be 90,000 only.
Yes.
And he has filed the GSTR1 with 90,000, but 3B liability will be 1 lakh. Because of the reason, output tax liability of February 1 lakh, add rejected credit note rejected value 10,000, 1,10,000. Because of amendment of credit note, minus 10,000. It will remain 1 lakh. Actual liability will be 1 lakh only.
So I think you'll have to repeat this point again.
Okay, I'll repeat.
Yes.
February tax payable is as per outward supplies is 1 lakh rupees. Okay.
Yes.
Because of credit note rejected, it should become 1,10,000. It will added to output tax liability without connection with the GSTR1 liability. It will add to the table 3.1A of GSTR3B. It will become 1,10,000.
Yes.
Before filing GSTR1, he has come to know that the credit note of the issued in the previous month is got rejected by the recipient. What he has done is he has amended the GSTR credit note in GSTR1
Yes.
and filed the GSTR1. Because of this credit note, liability as per GSTR1, instead of 1 lakh, it has become 90,000.
Yes.
Right?
Yes. And 10,000 for the original rejected credit note.
And when he has gone to GSTR3B, it has become 1 lakh.
Yes.
Reason is output tax liability of credit note rejected has got added to the GSTR1 liability and it has become 1 lakh.
Okay.
So net tax liability impact has become 1 lakh only because its February output tax payable is 1 lakh.
So that point is clear. But when we circle back to Divyansh's original question, the point here is that
There is no difference in, there is output tax liability
yes,
which has to be added to the tax payable is not appearing, it has remained same. His question is. This is
yes,
the reason.
yes. So he has put up a further question to this. I will read that also. In most of the cases, realization of rejection on credit note is being realized in month 2 and amendment in month 3. And now we have observed that this amendment is being given effect in total of GSTR1. But the auto-populated figure in GSTR3B in month 3 does not account for it.
That's what my explanation says.
Yes.
It will reflect reduce in GSTR1 liability and it will happen in GSTR3B. Output tax, see, rejected credit note value will be added to the output tax. It will not correlate with the, it will not be linked to the GSTR1 of the supplier. It will be
Correct.
in the GSTR3B, 3.1A.
Yes.
So your 3.1A, if you are, suppose for example, if you are, there is no supply in that particular following month, what will be the liability? There should be nil liability in GSTR3B. Because of rejection of credit note, your liability has increased to 10,000 rupees, irrespective of GSTR liability in GSTR1.
Correct. Yes.
Now let us say credit note is rejected and you have amended the credit note in GSTR1. So
Okay.
payable as per GSTR1 will be negative liability minus 10,000 rupees.
Yes.
Related IT tax payable in GSTR3B will be 10,000 rupees. 10,000 minus this
Yes.
10,000 will be 0, nullifying.
Correct.
So
Correct.
now in our example, we have output tax liability as per transactions payable for the February month is 1 lakh rupees. That is the reason 1 lakh is auto-populating. It is netting off.
Okay. Okay. Got it. Once through the rejection of credit note and once through the amendment of credit note.
Yes, that liability is getting impact, knocking off.
So suppose if the amendment was carried in February 20, okay, got it, sir. Devansh, is the query clear to you or should we explain it once again? If you could please confirm in the chat.
If it is a case of spillover, then he will be forced to pay February tax liability 1 lakh 10,000 and this 10,000 will get adjusted in next month, March liability.
So we have received a response from Divyansh. He's saying that nullification is not happening in month 3.
Why it
As you have explained in your example, it is not happening, the nullification part. Also, Divyansh mentioned it earlier also that this question was put up in our group as well, GST membership group. And in the group, he received a response that this might be due to some, just a moment, I'll circle back to that particular.
If that is the case, we'll handle the question in the group. Let him put the question referring to me.
He has already put the question in the group. Divyansh, we can have a further
We'll
discussion
hand the
on the
question in.
question.
No worries.
Yes. Yes. So next question is from Mahendra Prajapati ji. He is saying that we are under e-invoicing. Purchaser has not accepted goods and not claimed ITC in November 25 GSTR 3B. Now, what we should do to raise credit note or amend e-invoice with rupees 100? What is the better option?
Sorry, Pranjal, can you repeat the question, please?
Yes, sir. I will repeat the question again. So the question is that the supplier is under e-invoicing. They have raised an invoice for supply of goods and initiated the delivery of goods as well. However, the purchaser, the recipient has not accepted goods and they have not claimed ITC also with respect to this invoice in November 25 GST at 3B.
Okay.
Now, his question is, what should be the next course of action for the supplier? Should they raise a credit note or amend the e-invoice by ₹100? What would be the better option?
Amendment of e-invoice or making any changes to the e-invoice will not be possible. And cancellation of e-invoice is not possible post 24 hours of IRN generation. So only option is they have to raise the credit note. And why it has been kept pending from November 25 to till date? Reason they have to keep ready. Why is the delay in raising the credit note? A question may arise at the later date whenever the audit is happening or any procedural activities, investigation procedures happens by the department. What is the reason for delay in raising the credit note? And they have to ensure that the credit note is accepted by the recipient.
So, but this is a question from my end. Now, e-invoices cannot be amended,
Yes.
right? And in case if we have to make any amendments, then those amendments will have to be routed through GSTR1 only.
Yes.
Suppose invoicing is applicable on me and I have downward amended a particular invoice of mine by say rupees 10,000 and corresponding GST impact. So the originally invoice will have that 10,000 and the corresponding GST impact also, whereas the GSTR1 will have the amended net impact value. So there will always be a mismatch between GSTR1 and invoicing, right?
Yes. Every scope is there that you will get a notice for variance between e-invoice portal and GSTR1 file. So to avoid that, what you have to do is you have to route it through a credit note.
Okay. And Sir Mahendra ji has asked a subsequent question to this, that what if the client rejects the e-credit note?
Just a minute. Huh?
Sure, sir.
Can you repeat?
Yes. This question, which I asked you earlier, with respect to invoicing, that the goods were not accepted and they have not placed a credit note also, and the invoice also cannot be amended. Now, Mahendra ji is asking if the client, what happens if the client rejects the e-credit note?
You will be under trouble. You have to face a loss. You have to ensure that the credit note is accepted by the recipient. If he has rejected the invoice, then you have to amend the invoice and raise the credit note both, and you have to ensure that the credit note is accepted by the recipient. And invoice, both invoice and credit note has to be accepted by the recipient.
So I think as much as IMS has made things easier for us in keeping a track of the invoices and credit notes, it also has put up the responsibility on the suppliers to ensure that they are issuing the credit note only when the same will be accepted by the recipient.
Yes.
In case if the credit note is rejected, then the liability will be added in supplier's output liability for the subsequent month.
Yes.
So this is an additional measure that all the suppliers will have to ensure
There is
that
no other
you are
method.
Yes, that if you are doing any downward amendment of an invoice or if you are issuing a credit note, that then you have to ensure and a proper documentation should be there in place to ensure that the recipient will actually accept the downward amendment of credit note. Right, sir?
Not downward amendment of credit note, downward amendment of
So,
invoice.
downward amendment of the invoice. Any further question anyone has? The branch team, Mahendra ji. If not, then I think we will wrap up the session. It is 5:30.
One correction in my earlier replies.
Yes, sir. It is with respect to which question, if you could specify?
Identity of customer in case of B2C customers where it has been paid in cash.
Yes.
They have to keep the record of the name, identity of the customers, and they have to keep the record of the details of that particular customer who is picking up the goods, service supplies.
So, is Okay, so one subsequent question to this answer of yours. Now, a lot of customers might visit the Kirana shop on a daily basis. So when we
At
talk
least,
about these,
at
sorry,
least keep
yes,
the mobile number of that particular customer.
is I was about to ask them what should be the details required to be collected by the Kirana shop owners to make sure that they are in compliance with the law.
Yes.
So a mobile number should suffice in
At
this
least
case
mobile
scenario.
number and name, so that if required, they can be called back.
Okay. So also, before concluding the session, now that we are at the Mehul, can you please repeat your question again? And I think we took the question. If not, I'm really, really sorry. If you could just put up your question again. We'll take that question just now. So just a moment.
And for that identity, the supplier if invoice value should be 50,000 or more. If it is smaller value, not required.
Mehul, could you please share your question again? Actually, I'm unable to find it. So we are trying to find Mehulji's question, and before that, now that we are ending, we are proceeding towards the end of financial year 25-26. So, what are some of the things that you would advise to all the professionals that they need to ensure for a smoother transition to the next financial year when it comes to GST?
Fine. One, with reference to input tax credit, whether you have paid the supplies 180 days condition is satisfied or not, ensure that 180 days condition is not satisfied, not paid to the suppliers, you at least reverse at the end of the before end of this financial year, so that the transactions will fall within the same financial year, and make the reconciliation between GSTR 2B and GSTR 3B 4A auto populated ITC. Review your trial balance. Any RCF liability is there to be discharged but not paid. Ensure to discharge the liability along with the interest applicable on that liability of RCM to be discharged. If any wrong ITC is availed or erroneous ITC has been availed, ensure to reverse such ITC. If any of the supplies has been not uploaded their GSTR1 or not uploaded invoices but not filed the GSTR1, ask them to file the GSTR1 so that there is no spillover of input tax credit in between the financial years and reporting will not happen while filing GSTR9, which will avoid a lot of complications if the transactions spill over between the financial years. And check the turnovers reported in GSTR returns and as per the books of accounts. Stock ledgers, map the stock ledgers, stock is matching with the books. Reasons for variance, if any excess stock is available, is it because of sales return and credit notes has been not reported in the not generated, like we discussed earlier. Generate the credit notes and ensure that the credit notes are accepted by the recipients. And before raising the credit note, just make any preliminary inquiry what happened to the invoice raised, whether the recipient is following IMS or not. If not following IMS, what they have done with the GST invoice, whether they are following up circular 170 or not. If they are following circular 170 or if they are following IMS, it will be convenient for the supplier to raise a credit note and get it adjusted. If the recipient is not following neither following the IMS nor following the circular 170, then it will be a tough task for the supplier to get the credit note adjusted, because it will throw variance in 2 months. At the time initially when the recipient has reduced the input tax credit, manually editing the 4A file and adding up in the subsequent when the credit note has come. It will become a difficult task for the recipients to comply with the notices. This is what general things to be taken care before the financial year ends.
Okay, noted, sir. So we have one last question from Mehul which was missed earlier by me. The question is, suppose if the supplier issued credit note after the limit prescribed in section 16, then also whether the recipient has to reverse the ITC?
Yes.
Is it compulsory to reverse the ITC if the credit note is issued after 30th November of the subsequent financial year?
It will come out when an inspection procedure happens. Otherwise, it will not come out at all. And reason for rejection, see now the question is, we are under IMS. Either you have to reverse it under IMS or you have to manually edit the table 4A5 of GSTR 3B, where a red flag will pop up. So, to these conditions, to avoid that, and ITC availed ITC will, what is the reason behind issuing the credit note? Whether the goods has been returned or any price variance. Only for the two reasons the credit note will be issued. If the credit note is issued for the reason goods are returned, anyhow you have availed wrong ITC in previous months, you are not eligible to avail the ITC. You are supposed to reverse that ITC, accept the credit note and reverse the ITC. If it is price variance, your creditors ledger will be showing a payable amount because of not accepting the credit note. That is, you have to pass a debit note in your books of accounts. What will you do with the credit note? Credit liability appearing in the amount payable appearing in the trial balance. If you keep it as it is, you have to accrue it as income again subsequent tax periods. But because of the reason writing of creditors not payable. There is no valid reason if you are keeping it silent. Hope I am clear.
So, in case if any invoice is reported by the supplier in their GSTR1, then after the prescribed time limit, the section 16(4) limit triggers that the recipient cannot avail that ITC, and that ITC auto-populates in GSTR2B as well as the ineligible ITC.
Yes.
Right? But when it comes to
42 of GSTR 3B, if you are following,
it will auto-populate in, yes, 42 also. Now, but when it comes to credit note, even if the supplier has issued the credit note after the time limit prescribed under section 34, the recipient should reverse the ITC.
But how it will appear in IMS, how to look out. If possible, we'll keep the track of that questionnaire and we'll reply it later on.
Okay, so
We have to review how it appears in the IMS, how to check it up. I have not come across the situation.
Okay. So we have a subsequent question to this question only by Mehulji. He is asking that why the recipient has to reverse as the supplier will not be allowed to reduce the output liability.
Yes.
This is his question. That why the recipient has to reverse the ITC if the supplier will not be allowed to reduce the output liability.
That is the reason. See, when a credit note has to be issued by the supplier, he has to keep in the time limit as per the section 34 time limit to issue the credit notes. Reduction in value or total reversal of the invoice. There, section 34 is clearly saying that time limit as 30th November has to be followed. If you are not following the time limit, then how can you issue the credit note? First of all, GST credit note you cannot issue. You have to issue only a financial credit note. This component will be a loss. Loss to the supplier. And how it is reflecting in IMS, I have to see that. I'm not come across practically, so I'm not aware of how it is coming. But there is a condition laid on section 34 that credit note can be issued within such and such time limit.
Mehulji, I hope the answer is clear to you now. So with this, I think we can conclude our today's Q&A session.
Please. I'm thankful for dedicating. Prajal, with your kind permission.
Sorry.
With your kind permission, I'd like to say a few words, sir.
Sure, sir. It is all yours. Platform is yours.
Yeah. Thank you for providing me an opportunity to spend almost 1 hour 40 minutes. Even though it was scheduled for 1 hour, now it has 40 minutes has been excess past. It's okay for me. Thank you for giving me the opportunity of handling this situation, Q&A session. Thank you, Pranjal, and thank you, educating team. Thank you. Now we can
Thank
continue.
you. Yes. Thank you, first of all, to all the participants who came here, who dropped their questions. And to Srinivas, sir. Sir, it was really nice to have you out of the membership group with us here on YouTube answering all our questions live. It is always a privilege for us to, at least specifically for me to gain this knowledge from you with respect to GST. And I feel all our participants feel the same, considering most of them are members only from the membership groups. And as we all know, Srinivas is the regular expert who answers to all our queries in the membership group. Thank you so much, sir, and thank you so much all the participants for joining us today. Whenever the next session will be scheduled, we'll let you know in advance. Thank you, sir. I think, Rahul, we can end this now.
Yes, please.
Yes, okay.
Okay. Thank you. Bye, everyone.